Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Clem Chambers. He is the CEO of Online Blockchain PLC. He is also the founder of an upcoming financial information website called anewfn.com. Welcome back, Clem. How are you?
Great, thank you. Very, very good.
I wanted to get you on to talk about everything that's happening in the markets, gold, silver, and just pick your brain at some things. My first question for you is, in an era of digital currencies and blockchains, how do you see gold and silver maintaining their relevance as stores of value and hedges against systematic risk?
Well, something that I'm finding very interesting out there in precious metal land is the fact of the volumes produced. Yeah.
Yeah.
There isn't 10 times more gold, more silver produced. Well, not sorry, 1,000 times, 100 times. I'll get there in a minute. There isn't 100 times more silver produced in tonnage per year than gold.
Right.
So I think it's something like 20 times, something like that. Well, it shouldn't be like that, should it? If you think about precious metals, they should be balanced in terms of price and in terms of the amount that's being manufactured. Because
Right.
they're all precious metals. So you go, well, I want gold because I want it to be a hedge against inflation. Well, why not silver too? And so supply and demand, supply should equal the price. So if you make 10 times as much silver a year, it should be a tenth of the price of gold. But the volume of silver made every year and the volume of gold does not reflect the ratio of prices. And it gets even more wacky when you look at palladium and platinum. There's only 180 tons of that made, and I keep coming back to this. So, I mean, literally, I have to keep going off to check that's the right number. It's so few.
Yeah.
So, if you thought that platinum was as good a precious metal to hoard as gold, it should be 20 times more expensive than gold. It should be $60,000 an ounce,
Right.
but it's a third of the price.
Why is that? Just like, why do you think so?
It's a good question. It's a very, very good question. Well, the obvious answer is the wrong price.
Right.
And the obvious answer to me is platinum is the wrong price, i.e., way too low. Demand is different because obviously there's more demand for gold. Not many people have platinum wristwatches. Although having said that, they're about 50% more expensive than gold wristwatches because they're made out of platinum, even though the price of platinum is a third of the price of gold. Go figure that one.
Yeah, that
Yeah,
doesn't
and
make
not
that
many
doesn't
people
make
have
sense.
platinum wedding rings.
Yeah, that
No,
doesn't
don't
make
make
sense.
sense.
Yeah.
This is where your investing, attention should be popping up. Yeah. And of course, not many people have platinum wedding rings as opposed to gold, and not many people have platinum earrings as opposed to gold. So demand for gold is higher than the demand for platinum. So there's a reason. But the disparity of production to price is so wide and so out of whack historically, because it kind of, you imagine it to be one to one, which is a dangerous calculation to make because silver was 5 to 1 to gold back in the ancient world, and then it became 10 to 1 to gold, then it became 20 to 1 to gold, then it became 50 to 1 to gold, and now it's what 100 to 1.
Right. It's pretty
Yeah,
crazy.
but on the other hand, it could go the other way.
Yeah, absolutely. And, and I wanted to talk to you about your concerns right now. What concerns you, or what do you have your eye on in the markets right now that's kind of getting you like, like a little bit worried, or even if there's market opportunity, what are your thoughts on that?
Well, one should never be worried, and one should never be excited if you can afford to avoid it, because the market pays you in the coin that you want to be paid in, and if you want to be paid in excitement, then it will pay you in excitement, not in money.
Right.
So be assured that you want to get paid in money rather than get paid in kudos or paid in excitement or paid in thinking you're smart or paid in being more comfortable, or being paid so you don't worry. That's all currency, and the market will pay you in that if that's what you want. And you don't really want that, do you? You want to be paid in cash. So, but with that aside, what I'm watching is that the market is being driven, obviously, by Tarzan in the White House, um, or President Business for those people that have seen the Lego Movie, and that is the big driver. But what is actually driving below that is currency and interest rates. Yeah, so world currencies and interest rates are the big drivers. Well, treasury bonds. Bonds is a senior market. So you interest rates, bonds, and currency. They're the huge drivers of money. The markets are the junior, equities is junior to that. Now
Right.
he's driving all that. And one of the things that's happened that I actually discovered today is the Japanese are running like crazy to hedge their bets on their own treasury bond market, which is giant, and the American treasury bond. And they're pumping their money out of yen and into stuff that isn't yen and dollar. So they're kind of running from the dollar and running from the yen. And that is driving a lot. These money flows are what are driving prices. So the Chinese have been running away from treasury bonds. Well, actually, they've sold about $500 billion in the last year. It's worth looking that one up. They had 1.3 trillion and now got 800 billion, which is, not much really when you think about the scale of things.
Mm.
1 year's worth of trade surplus.
Right.
So, well, what are you going to do with the money? You've got to move it, haven't you? Now, if you don't want it in dollars, you make your bonds go away or you hedge them and you put it somewhere else, Europe, your own country, India, any gold, yeah. And those flows are the sort of flows that are driving prices right now. Now, if you wanted to be exposed to dollars, but you didn't want to be in US Treasuries, well, guess where you'd put it? You put it in the Mag 7, wouldn't you?
Oh yeah, of
When
course.
Yeah, well, when the bonds go, it used to be when interest rates go up, equities go down. But if interest rates are going up because the Chinese are pulling the plug on their treasury bonds and got cash but still want dollars, they're going to put it into equities and the equities are going to go up.
Right.
So all of a sudden, rather than doing that, it's doing that. And it was going, oh, what's going on there? So these are the big things. And why is gold going up? Because if you are, say, a Middle Eastern country with a lot of dollars and you want to hedge your dollars, well, you put it in gold, don't you? Because you're still in dollars, because gold's valued in dollars. But if the dollar's global value goes down, the value of gold, which is internationally hedged currency kind of thing, goes up. Yeah. So you
Right.
go, oh, gold's gone up. No, 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 dollar's gone down. Yeah, but
Right.
the number's gone up. Yeah, that's because the value of the dollar's gone down.
And
Right.
do you
So you
think
might
that
think gold's gone up, but no, gold's maybe not gone up at all. It's actually the dollar that's gone down.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metal storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
do you think that trend will continue in the next 3 to 4 to 5 years?
Well, I mean, if you looked at my portfolio, I would say yes.
Right.
I mean, I have, a few hundred weights here and there of bits and bobs. I am positioned in precious metals. I'm diversified of silver, gold, platinum, palladium. And I've got actually, which is the least best performing of them, I've got quite a lot of palladium because palladium is the one that goes, oh, it's like silver was. It's the Mad Harry in the bunch, and therefore I think it's got potential of outperforming all the other ones. It hasn't, but that's why. So I've got a clutch. I've got a diversified portfolio of physical metal. And the problem with metals is custodianship. So I have them vaulted in Switzerland because if you're worried about the world, you don't want to keep some of your assets in the place where you live,
Yeah,
and
absolutely.
you want your assets somewhere else. And Switzerland's quite a good place for that. If you're doing anything in even small scale, you can organize that these days. So that's nice. So I always say, don't listen to what someone says, watch what they do. And if you watch what I do, you'd find out I've got a big pile of precious metals. Now, I'd like to say my opinion is, and I'm, 50-50, right? I'm right. So, but my thought is precious metals is for, wild times. Gold is for war. Yeah. And that the direction of travel there is horrible, right? But nonetheless, it's there. Global tensions, nothing but up. Although America stopped screaming at all its allies and everybody else a little bit like it was earlier on in the year, but nonetheless, people aren't going to forget that.
Right.
And the global stress is going to be slowly but surely ratcheting up for a long time, which means that precious metals will go up. Yeah, defense stocks will go up. Things associated with war will go up. Yeah. So that is my positioning there. And I don't see, and the dollar is way too expensive, way, way too expensive. And that's what's driving a lot of these flows. Is if you look at the long-term chart, I wrote about this in Forbes a few weeks ago. If you look at the long-term chart, dollar's way higher. In fact, it went bang some time ago in terms of the yen. It went bang in terms of the euro, and it's way up there.
Right.
Well, if you want to bring interest rates down, you got to bring the dollar down. Or rather, if you bring interest rates down, which is going to be something, I think Mr. Trump is having, the Fed over for lunch. That'll be an interesting lunch. I wish I could be there for that one.
Right.
And he's going to be going, you got to drop interest rates. And Jay Powell's going to be going, maybe, maybe not. Maybe. You can't fire me. Maybe, maybe not.
Right.
And I've got my instructions. I know what I'm doing. I've saved the world about 9 times. We'll see, shan't we? And Trump's going, got those interest rates down. Ooh, you don't mind inflation? No, there won't be inflation because I say so.
Right.
So, who knows? But the dollar has to come down. It's too high. Yeah. And if you want to get your trade balance in line, you've got to get your dollar down. And, there's this thing about the reserve currency, America's reserve currency. That is such a pile of nonsense. I mean, it is a reserve currency, but what that means you do is that you are basically like the sea cucumber. You're puking your intestines out, so the fish eat them and leave you alone. That's
Right.
not good. It's if you think about it, pumping your confetti out to buy stuff because you're the reserve currency means that you are basically paying away your country because they're getting your currency, which is the measure of your asset base, right? So if people keep taking that, they can always come back and buy all your farmland.
Oh
Then
yeah.
what?
Yeah.
Come back and buy all your houses and come back and buy all your whatever. They're the ones getting your ultimate asset. So that
Right.
isn't sustainable forever. Now, there's something that's a bit even more. So maybe you should stop doing that. Maybe you should let China have the reserve currency and then you can take all its money. But there's a more, because if you have a reserve currency, you have to run a import export deficit. You have to run a trade deficit, allegedly. Anyway, something I learned over the weekend, which blew me away, and your listeners are going to go, "Oh no, really?" And if they don't say that, well, yeah, they will. They will say, "No, no, 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 no." Particularly if they're American.
Right.
China has twice as much money as America.
How's that possible?
Well, they've been doing rather well, haven't they?
Right.
If you look at the money they have, i.e., money, twice as much as the Americans.
Interesting.
So many gazillions of America, multiply it not quite by two, 1.8, and that's how much money China has.
Wow.
So who's the reserve currency now?
It would be China.
Well, they've got more money, and it's convertible into dollars if they want to let it be. Yeah. So the point is, the reason they don't let it be is because then they would be the reserve currency, and then they probably would have to start, having a trade less of a trade balance. Yeah.
Right.
But the point is, right now, the country with the most money, and I don't care, it's like saying this family has 12 children and the American family has four because it's a third of the population. But the family with 12 children has got twice as much money as the family with four.
Which is
Who's got
pretty,
more money?
which would be the family of 12. Ah, wow. That's a eye opener. I didn't even know that.
It was certainly an eye opener for me because I was thinking, where's all this money sloshing about. Where's it? Where's it all at? Where's it
Right.
all living? How much is in this treasury bond? How much is that bond? How much is these bond? Who's got the money? Where is the money? And I was doing all that. Oh, what? China's got twice as much cash as America. Well, who's the
Wow.
richest country now?
It'll be China then.
Yeah,
Wow.
already now it happened. It's not happening. It happened. Now, not the same amount of GDP. Totally, yeah. I think that's running sort of neck and neck, and the GDP per head is way lower.
Right.
But they've already got more, dollar bills or the equivalent of dollar bills, more money.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Wow, that's absolutely yeah, that's an eye opener for me, and I'm sure a lot of the people watching this are going to be scratching their heads and being like, how, how's
Well, they
that?
should go and check it on Google first, and so they can say, "Nah, it's wrong. It's wrong. It's not right. No,
Clem is wrong.
yeah, he's wrong. No, they haven't got any money at all." But what I like to say is, look, don't believe me. Please don't believe me. Go check it. You
Yeah,
use what I say as raw material for your own ideas and theories.
right.
And if you go away and check it and it's right, that'll be way better than you just believe in me.
Yeah, no, absolutely. I highly recommend everyone, check it out, do your research. But yeah, that's an eye opener for me. But Clem, I want to thank you so much for coming down to, to speaking to everybody in the community, the investing community, the gold and silver community, the precious metals community here. It's a breath of fresh air when you come on. I just want to thank you so much. And as the market develops, I'd really love to have you back on soon.
It's my pleasure. It's absolute my pleasure, Ivan. These sort of things are very good for me because it forces me to crystallize my thinking.
Yeah.
And the last thing in the world you want to do is be throwing money around when you're a little bit fuzzy. Oh, I'm not sure. I'm a little bit fuzzy. But when you actually have to, say what it is you're thinking and why you're doing what you're doing, it's a very, 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 very good practice to make sure that you're being consistent and you're not talking a load of old garbage. And
Yeah.
it's so easy to do. We all know that.
Oh yeah, absolutely. No, I really, really appreciate you coming down. But seriously, as the market develops, would really love to have you back on, Clem.
Yeah, I'm always here for you. Just give me a shout.
And a newfn.com, is that live now or people can
No,
sign
it'll
up?
be like live. We've got a big wait list that's grown, and so if anybody wants to join it, they'll get first dibs on being allowed in. We're going to be doing some interesting AI stuff, and that's pretty resource heavy. So we're not going to open it to the world just in case we get flooded. And, oh no, overwhelmed. Ah. So we're building up this list, and if everyone wants to get on it, please feel free to drop an email in there.
Everyone watching this, I highly recommend please go to a newfn.com, sign up on the email list and get prepared for it because I know it's going to be there's some big things coming up here soon. So yeah, thank you so much, Clem, again for coming down and love to have you back on soon.
Yeah, see you soon.
Talk to you soon.